Hello there, and welcome to No Fluff Stuff. Today, we're going to interview Erin Wicomb, and I think Erin has something to share with you that will get your head spinning about how to invest and how to think over what's occurring over the next 10, 20 years. Erin is a visionary, he's a thought leader, and he's put a lot of time into developing an approach for investing. You know, they say with entrepreneurship, the top line's for ego, the bottom line is how savvy entrepreneurs keep score, and it's not what you make, it's what you keep. So then the question is, what do you do with what you keep, and how do you grow a wonderful income for yourself? And Erin, let's start with what it is you do and how doing so helps people grow their capital.
Sure. Well, thanks for having me, Rich. I appreciate it. Yeah, there's a lot of answers to that question. So it really just depends on people's strategies, right, and on what they're looking for. Is if it's sort of asset protection or if it's sort of long-term growth. And so what my specific focus is on real estate investments. So I think that owning paper is one thing, and a lot of people have that. In their businesses, they own shares of their paper. So when you invest in the stock market, you're kind of doing the same thing. And what I like about real estate is just that it's the most fundamentally sound wealth generator for millennials, for not just millennials, but for millennia. For thousands of years, people that invested in real estate have created wealth for themselves. So that's what I focus on.
So, what percentage of millionaires have invested in real estate? You've got some amazing numbers to share.
Yeah, it's actually the statistic that's out there is that 90% of all millionaires have made their money in some capacity through real estate, whether it's through, an average house in the U.S. At the moment is about 400,000. In California, it's about 500,000. So if you have two properties that you own free and clear, you're a millionaire. So it's that simple to become wealthy through property, just by buying two properties and pay them down. So real estate is that main vehicle of generating wealth of not just in one generation but through multiple generations, and it's done in a shorter period of time now, especially through leverage, through creative investing, through strategic investing. And that's what's exciting, especially with the changes that's happening now on a contemporary, on a modern level.
Let's talk about those changes.
Sure.
And how you put the pieces together to come up with a strategy that we're going to share with them that you think is the best way to grow over the next 10 or 20 years with investing in real estate.
Yeah, sure. So a lot of people, there's this like sort of bucket, right? There's like this, hey, I want to invest in real estate. That's great, but not a lot of people understand sort of how, what that bucket, what the different options look like. So you can invest in REITs, which is like a public investment vehicle. You can invest in, into a fix and flip deal. You can invest into a land deal, mobile home parks. You can invest in commercial developments, condominiums. There's all these different segments that you can invest in real estate. And so the first thing I'd recommend for people is really kind of understanding what their goals is. Once they have an understanding of what their goals is and what is a short-term or longer-term investment and the kind of yields that they want to making, once they kind of understand that, then it's easy to kind of see. Then they can look at that sort of pie or that sort of different vehicles and see that matches their goals, right? So for example, if someone's more aggressive and they are looking to make a bigger return on their investment on an annualized basis, so in the high teens or even the 20s, something more aggressive is like a condominium development, which is traditionally much more lucrative returns. Or if someone's more passive and they want sort of more of a stabilized return, they can invest in a stabilized like a Walgreens or something that's more cash producing dividend on a quarterly or rental property portfolio that's already stabilized, which means that they have tenants in on a long-term basis.
So I want to back up a second and talk about how you developed the focus of where you see the sweet spot for investing moving forward. So would you share with us the trends that you've seen?
Sure.
That have led you to move back from New York to San Diego, and why you think that's a golden place to invest in right now, and just share your vision.
Sure. So quick background on myself is that I started investing into fix and flip deals and commercial deals and multifamily deals, mostly in the suburbia area. And once I grew an investment fund and started managing capital for other people, you have to report on why you're doing what you're doing. And instead of just being focused on a deal by deal basis and being sort of stuck in the weeds, you zoom out a little bit and kind of see what's happening with the trends. And by consistently reporting and looking at the data, I started noticing many factors. Number one, people not driving as much. So millennials, actually there's a story about there's car companies in Japan and China that are hiring consultants because Gen Z, which is below millennials, so from 16 to 21, they're not buying any cars anymore. They prefer to be on Instagram than to buy cars. So that's one major trend. So less cars, less people are buying homes. Actually, home levels are at a 66%, 63% actually rate on a national level. So, which is the lowest it's been in almost 40 years. So home ownership levels dropped dramatically. No one wants to commute. No one wants a white picket fence. People want to walk they want to have all that amenity sort of built in. So no one wants to do maintenance.
No one is this generation of people that maybe are right now somewhere between 18 and 30. Is that a fair assessment?
Yeah, I mean there's 18 and 35. People are just moving back to the cities, and then sort of empty nesters. People that are either from 45 plus to about over 60. They're also moving back because they want to be in that community of. They want to walk to the restaurants. They want to be able to walk to the coffee shop and go down there and meet people that they know in the neighbors, where they can't do that in the suburbs. So long story short, suburbs are dying and cities are booming. And
so let's talk about those percentages, because
Sure.
they're pretty amazing. And then go ahead.
Yeah, so we're seeing this massive urbanizational freight train, and so it's been happening for millennia again. But when the car was produced, when Henry Ford came along, and it's pretty interesting because California and Los Angeles is a great case study. The car disrupted the growth of cities, and you get that urban sprawl. But now that the car is changing again, you're seeing this huge migration back to the urban core. So downtowns are now starting to become a great strategy. So you look at back in the day. The stat that I like to look at is today is that 52% of the world is urbanized. By 2050, 75% of the world is going to be urbanized. So that means 75% of a $9.6 billion population is going to be living in cities. So you have a question, right? So if you have $1 million to invest, right? Do you invest $1 million in a mansion in the suburb or on the water, or do you take that $1 million and you put it into the city? So whether you're on the East Coast, you take that and put it into some land or a project in the Hamptons, or do you take the $1 million and put it in the city? Where are you going to get the most return?
So principle number one, not go west, young man, but go urban.
Correct. I mean, west is great too. I love California. So so my strategy is go west and go urban, because it's the lifestyle that people are focusing on. So you're seeing a lot of migration to these sort of urban cores, but also to climates that make a lot of sense. And so I studied the major metropolitan areas of the U.S. and the world, but specifically the U.S. and identified key factors that make a city. So the goal is like, okay, focus on cities. Okay, well then what makes a great city, right? And so it's complicated research, because it's not just jobs, it's not just population. There's this intrinsic culture. So there's a couple of top cities that are not in the United States, like Vancouver is a top city, Sydney is a top city, right? So you look at factors like that make it successful, and that's having a multifaceted city. So obviously New York is a great example, but New York is sort of eons ahead. It's had so many influence to make New York New York, and then you look at something like Detroit, and then completely opposite approach. So you have to find out what are those factors, and that's often having a multifaceted city. Does it have education? Does it have, tourism? Does it have culture? Does it have, entertainment? And does it have, any sort of underlying, technology? Can it withstand, an exponential technology. So for example, if a lot of cities like even in Dallas is built around these freeways, what happens when you don't need a car, right? What happens when so do you have a walkable, did the city planners who planned the city, did they look forward into 100 years ago when they laid it out and what that's going to look like? And a couple of cities have done that. And that's what exciting. That's what I'm focused on. And I identified San Diego as, just sort of the accumulation of all this data as the prime investment opportunity.
Well, when you speak about San Diego, and you shared with me the reason you've moved back there and see it as an opportunity. So much of there's great opportunities for jobs, for growth. There's a diversity of economy, and it's planning for the future. I used to live in Richmond, Virginia, and no offense to people that live in Richmond, but I always felt Richmond was steeped in its past without a clue to its present and its future. But as you looked at San Diego, or you look at any city for investment, what are the things you found in San Diego that said, hey, this is a city that's really progressive and growing and is going to take what it currently has to another level?
Yeah, that's a great question. So San Diego specifically, what I like about this, there's a couple of different factors, but it's a huge factor is climate, right? So the ideal climate in the world is a Mediterranean climate, right? So you get that on the Mediterranean border, Spain, south of France, south of Spain, Italy. It's the great climate, and that Mediterranean climate only exists in 2% of the land of Earth, right? So there's only 2%. So that's LA. That's LA, San Diego. That's obviously Mediterranean. The western part of Australia, and the southern tip of Africa. So right down there. So that's the only 2% of the world that has that climate. So if you look at sort of where you want to live in the world and where would you want to invest, and where people would want to live in the long term, it's in that great climate, right? So therefore, it allows you to sort of focus on LA and San Diego. So the climate is one thing. The second thing is the city on the coast, right? So traditionally, any cities that's on the water has had any city that's on the water has 80% more than any other city that's not, population-wise, that's not on the water. So San Diego takes the water. It's a coastal city. It's got the great climate, and it has that walkable ability. So one thing that the city planners did for San Diego a while ago is, instead of in New York where you have these huge blocks, they actually decided for light and for walkability to have half blocks. And so you have smaller towers, more light, more walkability, more activated retail. And so the interesting thing is, I was in Shanghai last year, and people asked me where I invest, and I said, New York and San Diego. And they were like, San Diego? Where's San Diego? This is in China. It's in Shanghai. They're like, you mean San Francisco? I was like, no. San Diego. They're like, San Antonio? I'm like, no. And San Diego is actually the second biggest city in California, but it's so under the radar. And there's other factors that make it great, such as the technology, the biotech, the military presence over there. All this stabilized economy allows people to have that diversified and multifaceted economy.
And none of it is polluting.
None of it's polluting. It's all green based, and then you have the whole tech side, and people from Northern California is moving down to create these tech companies, tech hubs, because it's that quality of life that people want in the long term. So, so that's why I'm doubling down. That's why I've moved back to San Diego, because at the end of the day, real estate is still, as an operator, you have to be in the market. It's a relationship-based game. If you want to get to know the sellers, they have to trust you to sell their property to you. So that's why I'm there, because I have to be on the ground, on the field, dealing with real estate agents and brokers and sellers that want to sell property.
So what I've learned from working with you is that you have an eye for looking at a lemon and turning it into lemonade. And as they say in retail, buy low, sell high. Take us through that process. And this is an art, I think, that ability to recognize what could turn into a great property. And give us a couple of examples. I know if people go on your website or on Facebook, they'll see a property you just bought for $250,000, that when you're done with it, you'll be able to sell for close to $500,000, I believe.
400,000. Sure.
400, and that there it's because of what you see you can do with the property. So take us through a process like that and how you're able to see things that others don't.
Sure. So there's actually three phases of investing, right? There's the opportunistic, where there's nothing there and you build something from scratch, right? That's like a development deal. Then you come step down, and that's the most sort of riskiest, biggest upside. Then you come a step down, and it's called value add, right? And that's where you're redeveloping or rehabbing a property. And that's what I've made a lot of success in, because there's less risk, and you're able to reposition the property to either showcase it better. And that could be a commercial property or residential property. And I do both, residential and commercial. And then the third tier is investing in core assets, which are more stabilized, less return, less risk. And that's something that doesn't give you that much margin.
And that's what you were talking about earlier. Choose where your comfort level is, how aggressive
Correct.
you are, and what type of properties to invest in, because not all properties are equal in terms of risk and reward.
Absolutely. And with regards to buying and selling, adding value and making margin on a real estate deal, it really comes back to what your goals is. And so what I've learned by being in Wall Street for 4 years, being in New York, is that the successful real estate families, the legacy families, they buy and hold. They, some of them trade rarely, but if you want to build wealth over time, you want to be able to keep properties. And I understand that people want to turn around assets and things, but if you want to be a day trader, you need trade stocks. But buying and selling properties, the hardest thing is to find a great deal, close on the great deal. It doesn't make sense to sell real estate in short periods of time.
So let's talk about that, because I think you shared with me earlier one of the things you've learned is you wish you had held on to at least a half a dozen properties that you flipped.
Of course.
So how do you make money on that? And how do you resist the quick return for long-term gain?
Yeah, absolutely. So, I've bought and sold over 100 million worth of real estate. And, I look back and I started buying in 2008, and, I didn't even know that that was the best buying time ever. And, if I kept a fraction of the properties as buy and hold, we wouldn't be having this conversation. I would be living in Mexico somewhere, just with a lot of cash flow coming in, instead of having to consistently operate and find deals and turn them around. So I think that, long term, if focusing, whether it's 10, 25, 50 years in the future, I want to be able to build a portfolio with a group of investors and focusing on San Diego as a city, because I just feel like it's the most undervalued city. And what was the other part of the question?
Well, we were talking about resisting the temptation.
Oh, that's right.
And then really assessing, if I hold on to it, why is that a better deal?
Yeah, absolutely. So you can make, in a short-term investment, you can turn around and sell a property, but then there's also Uncle Sam that you have to pay. And with Uncle Sam, you're going to get the tax hit, but if you keep it for the long term, you get a dividend, and the dividend allows you to be able to have that cash flow that produces the lifestyle that you want, and that's really the most important thing.
So when you look at purchasing a property, and you're looking at factors that will determine, can this property cash flow positively for me if I keep it? So how do you assess that?
Well, we underwrite the property as we need it, depending on the specific opportunity. So, we run the numbers, look at the best case scenario, and see how this property is going to be best used to be able to produce that goal. So, for example, if it's an office building and it's got maybe it's a retail use, but it's better performed as an office, because people need a creative office space. And we look at the numbers. You always got to work backwards. So you see what could be done. So you have to have that vision and be able to see what's done. Then you work backwards to the buy, because real estate is you making your money on the buy, right? Mm-hmm. That's essentially the essence. And so, does that cash flow that the property produces spit out and provide you the right ROI for how long you intend to hold the property?
One of the things you shared with me in our discussions working together is you're also looking for the right zoning. And you've shared, okay, I'm going to look at this property today and it's 1 level or 2 level. I can take it up to 10 levels.
Yeah, I didn't really want to share that on this podcast. It's kind of my secret sauce, but...
What question? I don't remember.
No, but basically, the strategy is I also believe in verticalization in cities going more vertical. So I focus on properties that have certain use today, maybe 1 or 2 stories, but has the ability to be able to go up 20, 30 stories. And so a lot of times that's not necessarily valuable today, but if you're keeping that property over a 10-year period, you can either build it yourself or sell to a bigger developer to come out. So that gives you exponential returns. And
you're a member of EO. You've been
Correct.
a member for years. You work with entrepreneurs. What advice, as we wrap this up today, what advice would you give entrepreneurs in terms of having the courage and the vision and the focus for investing in real estate?
Sure. So I think what's great is, being able to have your primary business that produces income and provides you investing capital. But I do think some of the people that are my close friends, they've always diversified into real estate in some capacity, whether it's owning or putting a portion of their capital into real estate. That's so important because if you at least buy 1 property a year and over 10 years you have 10 properties and those are getting paid down, or you're building that equity appreciation, that's going to provide and a business these days, especially a technology business, changes so fast. But we're always going to need real estate in some capacity, and there's always going to be a demand for urban real estate. And so if someone who's an entrepreneur, I think it makes sense to diversify some of that investable capital into an urbanized real estate strategy. It just makes sense long term.
So to look back at some of the things we talked about, what are the trends? What are the trends in people movement? Where are the best places to invest? What makes them valuable? What kind of investment should you make in terms of comfort level? And ultimately, make the decision whether to get in the game.
Yeah, sure. So, I'll wrap that up. Urbanization, people are not buying, they're renting more, walkable areas, just finding sort of, understanding your strategy, whether it's, something more aggressive, something more conservative, and, and carving out some of your portfolio to make sure that real estate is a priority. I think that's the most apparent thing is making sure that you have a significant amount of your portfolio in a real asset.
So the secret to your success is in 3 areas of focus. 1, establishing relationships with people that want to invest, that are confident in you and in the direction you're taking them. 2, finding the right properties and seeing what you can do with them so that you can turn them into something where they'll be far more lucrative than just buying something as it exists and keeping it. And thirdly, taking it home, completing the deal, and making it happen. So if I'm an investor and a potential investor, and I'm interested in what you're doing, how do I get in touch with you? And are you taking on new prospects right now, new people to invest?
Sure. So I'm very focused in San Diego. That's all I'm doing. And the best way to get in hold of me is Facebook, or just Google me, or through the website, which is maverickinvesting.com. And I think that I used to have a fund, and a fund's a great way to go. And I think it makes sense. But now we're kind of doing more on a deal by deal basis. And I think that down the road we'll probably have another opening for our fund. But at this stage, it's just on a selective basis. Do we have the same goals? Do we have the same strategy? Do you see what I see? And we need that alignment, because life's too short if you don't have the same alignment on someone's goals. You want to kind of keep a circle of friends around you that really sort of believe the same thing that you do.
So now that we've talked about what you do and how you do it, as an entrepreneur, speaking to entrepreneurs, as you look at where you are today and where you want to go, what are the greatest challenges you see to grow your business?
Yeah, absolutely. So on my side, we started very entrepreneurial, and I've been doing this for 10 years. And so I think going from more of an entrepreneurial business to more of an institutionalized business is been the biggest challenge. So
mom and pop to
mom and
professional.
pop to professional. So exactly. So it used to be much more sort of a handshake, buy a property, do a deal, that sort of thing. We're more now, it's more systems and processes, and getting the right management team, and building the right culture in place, getting the right branding in place, and having that consistency. That's what I'm focusing now.
So it takes a village to buy a village?
Pretty much, pretty bright. Or a couple of ninjas. A couple of ninjas can take down a village. So our team is not necessarily a village, but we're real estate ninjas, because you have to be sort of on the ground. You got to be snipering things. You got to do things creatively, and I think that's very important in order to get real estate. It's also one thing I didn't say. It's what's the word? It's not a fair market. So it's not like you can. If you buy a stock, that's the value of the stock. You can't sort of buy it for less or sell it for more unless the market goes up. Real estate allows you. It's the only investment product that I know that you can buy it below the market value. And so if you're trying to buy things below market value, you've got to do things that not everybody is doing, because otherwise you're paying market or above market. So whether you're finding a motivated seller or finding someone distressed that needs to sell the property, you're able to get that property at a discount. And so that's what we focus on.
So there's a discipline in buying.
Absolutely.
Any final words you'd like to share with fellow entrepreneurs?
Yeah, I think that even on my business, doing this for about almost 10 years, is that it's always challenging, no matter what your goal is, no matter what your passion is, on what you're trying to create in the world. But I just recently watched one of Steve Jobs' documentary, and I used to think that this Mac that I have, the Apple just sort of created it, but it's a process and evolution over time. And it's not like I came up with investing in cities, but it's been an evolution. So with your business, if you're going through challenges and stuff, just and you believe in the end result, just keep churning through it, because eventually you get to tweak something, make it better. And eventually, if you're starting off with some sort of crappy car, you can build that into a Ferrari or McLaren over time. And so, but just consistently working on it and putting better pieces together and getting the right engine, etc. So just ignore the challenges and push straight through. I think that's the best advantage.
Thank you, Erin. Wonderful to be working with you as your coach, and thank you for sharing so much wisdom today.
Thanks. Appreciate it, Rich. Thanks for having me.